My name is Hein at Superannuation Warehouse, and I'll be discussing buying property with loans in a self-managed super fund. An SMSF can buy property with or without loans. If you buy with loans, a specific structure is required called a bare trust arrangement. A bare trust is simply a trust to allow for borrowings. There's a special rule or a requirement in the legislation saying an SMSF as an entity itself can't have any loans within the SMSF. For this reason, we set up a bare trust, also referred to as a custodian trust, that will actually house the loan until the time the property is paid off, and then the property will revert back to the SMSF. Banks usually want a custodian trustee in addition to the trust itself, especially if your LVR or loan to valuation ratios are high, so around 80%. If the values are low, around 50 or 60%, with other words, you're going to give about half the value as a deposit and the bank only gives you a 50% loan. In those cases, the banks may not require the custodian trustee, and that will save you a bit of money with setup. A related party loan is where the trustees act as a bank towards the SMSF, so they will lend the money on a commercial basis to the SMSF, and the SMSF will pay back the trustee with capital and interest. There's special rules that apply here called the safe harbor rules, and the tax office specifically allow for borrowings that the trustee make to the SMSF. When an SMSF holds residential property, no personal use is allowed for you or your related parties. However, commercial property can be used. For example, a medical practitioner can buy the premises and rent the premises to their medical practice. Similarly, plumbers or handymen can buy a commercial property like a storage unit, and the business can pay rent to the SMSF. That's a way to keep wealth within your family. For more information, please get in contact with the form on this page or give us a call.